Well, the Finance Ministry of the Government of India has decided to grant a loan moratorium, first for a period of 3 months from March to May, which was extended up to the 31st of August. So a total of 6 months loan moratorium period was granted to borrowers, both of personal loan and business loans. It covers all borrowers in that sense. Now, what is a moratorium? A moratorium period is technically the period of time during which you are not duty bound to pay your EMI. You can stretch your EMI for over a period of time. So that is the moratorium period that is given to you. So the immediate burden of paying up your EMI as per deadline is taken off. So that's the only thing that a moratorium does. So is it a relief for the borrower, or is it just a smoke screen in the name of relief? Does it really provide any sort of concession to a loan borrower or not? Let's look at the two sides. Well, on one side, well, it is sort of a smoke screen. There's no real relief, because what is the borrower getting? He's only getting a facility to defer his payment, right? So it's going to be a staggered payment. It's not as if you can escape your responsibility of repaying your loan. You still have to repay the amount that is due to you. There's no escaping that, no change in that. You can pay it over a period of time. That's number one. So all you are getting is a deferment. And the second thing that you are getting, of course, is that the deadline does not have to be honored as per the original deal. That's it. It's not as if you are getting any decrease in your interest. There is no scaling down of interest. And of course, there is no escaping paying the amount that is due to you. So net, you are only being protected from penalty for that limited period of time, for the moratorium period, which means that only thing that the Government of India is doing is helping you not turn into a loan defaulter. That's about it. Secondly, this is a time of crisis. It's an unprecedented crisis. The government acknowledges that, the whole world acknowledges that. The borrower has not caused it. He has been pushed into financial distress. It's the job of the elected government to cover for people in distress, which the government is shying away from doing. Because it is nobody's case to say, well, the banks will have to take care of the interest waiver. It's a case-to-case basis. The government is shirking off its responsibility. It can, if it wants to, decide to provide some succor to the borrowers. People are facing monetary crisis. People are not able to pay school fees. There's a real financial distress out there, which the government has not been sensitive to. And thirdly, there is an NDMA Act. There's a National Disaster Management Act, which provides for situations like this. The government can, if it wants to, create a corpus to bail out the afflicted lot, those who are not able to repay their loans because of a loss of job or income or reduced pay. There is a facility that the government, there are provisions that the government can invoke under the NDMA Act, which also the government is not intending to do, at least as of now. What's on the other side? Well, on the other side, if the borrower is a citizen, so is the depositor. So a bank, for that matter, has to protect the interest of both. It cannot protect the borrower at the cost of the depositor. And the same argument, of course, also extends to the fact that a banking institution is providing the facility of a deferred payment that also is facilitated at the cost of something. It's not as if that is not hurting the banking system. So let alone the issue of interest waiver, even facilitating a deferred payment is something that the banks are doing under compassionate grounds, or the government is doing under compassionate grounds. So it would be unfair to say that nothing is being done for the cause of the borrowers. And one size fits all solution of an interest waiver, even though that is a matter which is still under sub judice, the government is not committed to it and is perhaps unlikely to commit to it. But this kind of a simplistic solution actually can do more harm than good, because think about it, a banking institution is something that exists in public service. In any developing country, this is a very critical sector. You cannot derail a sector by taking policy matters of this nature, of interest waiver, etc., because it would have a cascading effect on a lot of other things, and it's going to affect far greater number of people. And therefore, interest waiver as of now as a blanket rule has been put off the table. But yes, there is still a scope that on case-to-case basis matters can be considered. In fact, the only way a concession on interest can be considered is if it is customized case-to-case basis. I mean, think about it. For that matter, someone can misuse a benefit like that. It would be a waste of public funds if this benefit is given to everybody all across. Those who actually need a bailout must be identified, and only they must be covered for, not everyone across board. So therefore, this can only be case-to-case basis, as the government has also argued in court, and it cannot be an overall package for everyone across board indiscriminately. So those are the two sides. Tell me what you think. Thanks for watching Two Sides with Afrida.